Ladies and gentlemen, good evening. This is Christopher Aaron. It is March 28th, 2018, and I do thank you for tuning in. We are looking at silver breaking down from an important pattern. And as always, we will focus on the patterns in the price itself here foremost. There are plenty of other channels discussing the fundamentals, but I would simply ask you to go back into the history of those channels or those analysts and look at what they were saying 3, 5, or 7 years ago and see if that type of fundamental analysis truly was accurate. We are seeing after the Federal Reserve rate hike, which gave a nice boost to the metals over the last week, we are still seeing silver break down in front of our eyes. However, is this going to be a major breakdown? Is this the end of the precious metals as we know it? Or is there perhaps a second round, a second act to come here this year where we could see another surge happening? Let us take a look. And I also want to let you know, I'm going to be talking at the end of this video about a home run potential that I see setting up here in the gold sector. And I will be discussing this at the very end of the video, just so you know. As always, what I do here is I discuss what I'm doing with my own money, with my own investments, and I simply publish the research that I'm using here for the benefit of others who may find it useful. So let us take a look as we move into looking at some of the fundamentals this week. This article from CNN Money, and thanks to one of my associates, Ali, for sending this to me. I really appreciate that today because I would have missed this story. And we are seeing here this discussion of the $300 billion that the United States has to borrow this week alone. How crazy is this? Okay, so the exact figure is $294 million. As the United States is fighting with its biggest creditor, China, in these trade wars that are happening now. And the important point from this article is that this is the highest issuance of debt for the United States since the 2008 financial crisis, which, just remember what was happening at that time. Individuals are coming on the TV. Hank Paulson was coming on the TV. Timothy Geithner was coming on the TV. President Bush and then President Obama were coming on and just telling us that if we did not give up all of our tax money that year, if we did not agree to bail out Citibank and Deutsche Bank and AIG, that none of us would be able to withdraw our money from our bank accounts, that the system would stop working, the traffic lights would stop running. This was going to be Armageddon, right? So what we're seeing is the United States has reached the 2008 financial crisis levels with its debt borrowing. This is what is happening on the fundamental basis. However, unfortunately, in the rational timescale, the fundamentals do not truly matter. What matters is what side is the market moving on. And right now we see the precious metals markets are wavering on moving to the dark side, at least for the short run. This is what we see in the actual charts. We see a chart like today. This is liquidation. When we look over the past 2 days, especially starting yesterday on Tuesday, and we just see steady selling without anything of a counter trend rally. We're simply looking at long liquidation amongst futures contracts holders. That is what this type of a movement signifies. We will see this in the Commitment of Traders report, which comes out on Friday. I almost guarantee there will be a net loss of long contracts here for this week. And we look over at silver, we see a similar type of action. Silver is still underperforming gold. The sellers keep showing up in silver. Anytime there's a 50-cent rally or so, the sellers are just showing up immediately. So either there's a ton of silver coming out of silver mines that we will see in the 2018 statistics when those come out in early 2019, or we have a lot of selling in the futures contracts perhaps by some of these nefarious sources. Either way, I would just say, yes, we can know this, we can see this, but let's also pay attention to it because we do participate in these markets. Let's not try to act like we don't have to buy and sell at these prices at any point in the near future, because we do. So silver is breaking down. Let us look at the chart. We were looking at this a couple of weeks ago. The symmetrical triangle, very clear, that is formed here. Multiple hits, 4 hits along the lower, 3 hits along the upper trend line here. We're looking at silver since the 2015 bottom. And mind you, I was beating the drum in late 2015, early 2016, telling people about this move. And now I am telling you about a different scenario that is setting up here. So I am primarily going by price to look at the intermediate and the long-term trends here. I understand those fundamentals, but the market can stay irrational for a very, very, very long time, and we had better pay attention to it. So what are we seeing right now is, as we bring up the color key here, mind you, every color line, for example, these magenta lines are showing us broken trend lines. We can see the initial downtrend was broken out of the 2016 high, and then something of a secondary consolidation is formed. Blue indicating primary. Excuse me, I said magenta, I meant turquoise here for the broken trend lines. The blue trend lines are the primary trend lines, the symmetrical triangle. We can see, unfortunately, the silver is attempting to break lower right now. It looks like it's about to break lower from this symmetrical triangle, which has basically defined the price action for the last year. So what does this mean when one trend line is broken from a converging series? The lower trend line, which is breaking, must be thrown out. This becomes a broken trend line according to this color key, and we have a new set of expectations for the price of silver. We may not like this, we may disagree fundamentally, but this is what the silver market is showing us. It is showing us that it is getting ready to continue grinding lower over the intermediate term. Now, there is a major support zone that exists here above the $14.20 level from the flash crash in the middle of 2017. What becomes primary concern at this point is this declining trend line here from the 2017 peak. Declining trend line. We are expecting something of a grind. Now, this could be very, very challenging, especially if you're too short-term oriented. If you grow frustrated, I would say to really watch your own emotions, because you may grow frustrated at just the wrong moment here. So we're expecting something of a grind lower in the price of silver to last between the next 3 to 6 months. Coming back into the major support zone, this could be rather uneventful as silver grinds lower. And then I believe what is setting up is a break of this trend line. So it's not so much that the thesis may not happen still. Of course, we can't predict the future. We just have to look at probabilities here. It's not so much that the bullish thesis is gone, but we see, at least in the short run, that the pattern is indicating it is going to be delayed. Okay, there's going to be some grinding, price movements lower, despite what any of those fundamentals may show. And why do I think that we still have the potential to set up for a bullish move after this long, it's going to be about a 2-year grind in the price of silver, about 2 years of grinding price action? Why do I think we still have the potential for this is when we switch over to look at the gold chart. Now, gold is still in a leadership role, and we talked about this last week. We see what is a very clear 2-year resistance zone. How many hits do we have now? 1, 2, something of a third hit right here in 2016, 4th, 5th, 6th, and one could argue this was a another hit on the resistance zone. It failed to match it quite closely enough in my book. It got fairly close here. This resistance zone between 1365 and 1378 or so. We're talking anywhere between 5 to 7 hits, depending on how we want to count these minor hits on the resistance zone. Important point, horizontal resistance, rising support. Very clear rising support. Gold is the leadership. Gold is the 5,000-year-old store of wealth. Gold is the metal that you can lose at the bottom of the ocean and it will not tarnish, it will not corrode. You can dig it up 1,000 years later and it will be the same ounce of gold unless little bits of it were chipped off by rocks or coral reefs or sharks that bit into it. The gold itself, the element, will not decay. It will not tarnish, it will not rust, it will not corrode. Gold is the leader. Silver, unfortunately, does not share those exact properties. So silver we have to consider in the following role. Gold is in the leadership role. And the chart for gold right now is still a bullish chart unless proven otherwise. Unless proven that we see a negation of the rising support. That would be a major signal that gold is not in a bullish posture. As of this point, it still is. Yet, how do we bring into account that information that we're looking at with the price of silver, which is breaking down at this point? How do we bring that into account? The only way we can make sense of this is to think that gold is going to come back into its support zone here, somewhere between most likely 1280 to 1260 over the next several weeks. 1 to 2 months is my most reasonable expectation, before rounding out in the second quarter and this market begins to make its last attempt to break through this resistance zone. And we talked about in the beginning, I'm going to show you what I mean here. This is what I'm doing with my money. I'm going to show you the home run potential that I think is as reasonable of a home run potential as could be possible in the gold market, given the pattern that still exists here in the primary metal itself, being gold. There's the silver chart, so we'd be looking at silver. This will be the big question. This will be late 2018, early 2019. What happens with silver when we see gold attempting to break its resistance zone? What happens with silver? If silver stalls out right here, this will be a major warning signal that it is probably time to sell a significant portion of our holdings, especially the leveraged holdings, because this market may have a false rally that needs to wait for several more years. I think this potential is still setting up for later on in this year, based on the leadership that we see in the gold market in front of our eyes. There's no way that this pattern can be portrayed as a negative pattern at this time for what is the most important leadership asset in the entire precious metals sector. So let us talk about that home run potential. This is what I am looking at. This is what I am planning to do for myself. This is what I have been doing here. And we are looking at a company. I'm not going to disclose the name of the company at this point. This will be going to premium subscribers, this opening. This is part of what we do in this service. If you choose to subscribe to the premium service, this is part of what you are getting for that subscription. We expect to be opening up this potential later on this year in 2018, given that bullish posture that gold is still standing at. What we're looking at here is the price of gold at the top from 2009 through the present. And at the bottom, we are looking at a company that is sitting on over 4 million ounces of proven gold reserves in the ground. And this will give you an example of how undervalued the gold mining sector is at this point relative to not only the stock market, not only the bond market, but even the price of gold itself. So this company, which is sitting on 4 million ounces of gold, traded at almost $10 a share, back in 2010, 2011, when gold was the same price that it is now. You can see that on the upper portion of the chart. Yet this company has moved down to 30 cents per share. Why? Why has it moved so low? Is it dilution? No. The company has actually only diluted its shares by about 15 to 20%. With the next financing they will announce, which is what I'm hoping to open up to premium subscribers, it'll be about 20% dilution. So the 97% drop in the valuation of this company does not account for dilution. What are we talking about? It's sentiment. The sentiment is so poor in the precious metals sector, and I can even sense it myself. You know, I've been getting a little bit down on the sector recently, and I've come to know my own sentiment. When I'm feeling bad about the sector, that tends to mark a turning point in the near future, and we can see that across the board. So this company is selling at 97% below its 2010 level, and just keep this in mind. This company is sitting on 4 million ounces of gold in the ground. They're moving the deposit toward production, toward a decision toward production later this year. It would take a 3,000% higher gain on the valuation of this stock to move it back to where it was in 2010, 2011 at today's prices in gold. So we are going to be opening this up, I expect, to premium subscribers. You could buy stock in this company now if you want to on the open market. I'm not going to disclose the name now, but there's even a better way to do it than just buying stock in a proven gold deposit, which is to participate in a private placement. If you have the risk tolerance. Listen, nothing is guaranteed. Could we be completely wrong? Yeah, it's possible. Maybe gold only moves a little bit higher over the next year and then begins to grind lower again. Maybe our thesis takes a couple of years longer to happen than we originally hoped or expected. But when you're talking about risk to reward, you're talking about a company sitting on 4 million ounces of gold that at present gold prices was 3,000% higher than it is today. And basically it's the same, if not a better company. This is what is going to be opened up in the form of a private placement to premium subscribers. So I just want to let you know this is the kind of thing that we're getting into increasingly in this service. We also cover the GDX and individual miners. But in my opinion, this is going to be a home run. This is the potential to be one of those investments, if you think about it, where, you know, this makes your career or it makes your next decade. If we are right on the prices of the metals, and if the irrational behavior in the market changes. We can't say for sure. Look, I'm a realist. I know that the markets can stay irrational for longer than even I expect. So if that happens, we have to consider that possibility. But if the markets regain some sense of rational behavior and begin to revalue gold deposits in the ground, then this is the potential for an absolute home run. I don't know how else to say it. So I'm going to have another video on this coming out within the next few weeks. I'm going to describe this scenario in much more detail if you're interested. Just know that now this is going out to premium subscribers. It's a more nuanced investment in the gold mining sector. I also work with individuals. If you would like to discuss your situation from someone, and mind you, I do not take any fees from these gold mining companies. I don't take any fees from any of the companies that I profile. I simply disclose the investments that I'm making here for the value of individuals. So if you would like to discuss your situation, know that I work one-on-one with individuals by voice, by phone, by Skype, or by email. You can find more information on that on the website. I do thank you for tuning in. This is an absolutely intense but very important time in these markets. Nothing is ever guaranteed in life. We are seeing the breakdown in the price of silver in front of our eyes. It's indicating that silver wants to move lower, at least for the next several months. Yet gold is showing clearly a bullish posture. There's no other way that chart can be analyzed than to say gold is in a bullish posture over the next year. So there's a duality here that we're seeing in these metals. It's very interesting. We have some leading indicators that we'll be looking at this weekend in the premium service. We will be studying the gold to silver ratio. Very nice setup happening in the gold to silver ratio. We will be looking at the leading indicators coming from Wheaton Precious Metals. This is giving a nice indicator once again. We've studied this in the past. This is all coming up this weekend. I do thank you for tuning in. And I hope that if you are invested in this sector, you simply understand that there is a major potential here setting up. You know, if silver goes back to $50 an ounce, I think it's impossible to fathom how much some of these mining companies could be worth if silver goes back to $50 an ounce. This could be life-altering. But the price to pay, there's always a price to pay for life-altering potential. There's always a price to pay. So we're in the price to pay right now. The price to pay is that the market doesn't always move exactly when we want it to. And I simply thank you for being here because, as in many things in life, it is better to navigate these markets together.